Did you know that many businesses fail not because their idea was bad, but because of poor planning? It's true. Even seasoned professionals can fall into common traps when creating a business plan. But the good news is, by learning what these mistakes are, you can save yourself a ton of time, money, and heartache. Let's dive into the critical mistakes that successful entrepreneurs always avoid. First up, starting without clear goals. Imagine trying to build a house without a blueprint. Chaos, right? It's the same with business. A solid business plan must clearly define what you want to achieve, both in the short term and the long term. Are you aiming for a certain market share, a specific revenue target, or expanding to new locations? Without these clear goals, every decision becomes a confusing guess, and your progress will grind to a halt. Professionals set specific, measurable, and realistic goals from day one to guide their every move. Next, a huge mistake is ignoring market research. It's so easy to fall in love with your own product or service and just assume that customers will flock to it. But assumptions are dangerous in business. Professionals never make this gamble. Instead, they invest time and effort into studying their target market. They want to know everything. Who are their ideal customers? What are their real needs and pain points? Who are the main competitors? And what are their strengths and weaknesses? Only with this deep understanding can you make informed decisions that actually resonate with the people you want to serve. Another classic pitfall is overestimating revenue. When you're excited about a new venture, it's tempting to imagine sales going through the roof from the moment you launch. But reality is often much slower. New businesses usually take time to build trust and gain traction. Professionals know this, so they use realistic, conservative numbers for their revenue projections. They plan for a slower start and create a financial model that can withstand a gradual ramp-up period. This approach prevents panic when sales don't immediately meet those sky-high expectations. On the flip side of overestimating revenue is underestimating costs. This is a big one. Many new entrepreneurs focus on the obvious expenses like rent and inventory, but they completely forget about the hidden costs. What about marketing campaigns, website maintenance, software subscriptions, professional fees, or those completely unexpected repairs? These can add up fast. To avoid this cash flow crunch, professionals always build a buffer into their budget. Having that extra emergency fund gives you the breathing room to handle unforeseen expenses without derailing your entire operation. This brings us to poor financial planning in general. One of the quickest ways to damage a business is by mixing personal and business finances. It becomes a nightmare to track your actual profitability and can lead to serious legal and tax issues down the road. Professionals treat their business as a separate entity from day one. They open a dedicated business bank account and meticulously track all cash flow, expenses, and profits. This financial clarity is non-negotiable for making smart decisions and proving your business as health to investors or lenders. Another serious mistake is ignoring risks. Every single business, no matter how brilliant, faces risks. These could be new competitors entering the market, sudden economic downturns, supply chain disruptions, or internal operational issues. Amateurs often have a hope for the best attitude, but professionals prepare for the worst. They take the time to identify potential risks and then create contingency plans. What will you do if your main supplier goes out of business? What's your backup plan if a key employee leaves? Having these Plan B strategies ready can be the difference between surviving a crisis and going under. Then there's the mistake of having no clear marketing strategy. You might have the best product in the world, but if nobody knows it exists, you have no business. A good product doesn't sell itself. Professionals understand that marketing isn't an afterthought. It's a core part of the business plan. They clearly outline how they will reach their target customers, what channels they will use, how they will build their brand, and what specific tactics they will employ to generate leads and sales. Your marketing plan is your roadmap to finding and keeping customers. But every business is unique. Your business model, your target market, your team, and your specific goals are all different. A successful plan is a custom-tailored suit, not a one-size-fits-all t-shirt. A smart, realistic, and well-researched business plan isn't just a document for investors. It's your personal roadmap to achieving your entrepreneurial dreams. Thanks for watching. If you found this helpful, Make sure to like, subscribe, and follow WBS for more professional guidance on business, finance, and startups.